All right. Good morning, good afternoon, possibly good evening. I have no idea what time zone you are joining us from. This is Don Kaufman. We're getting started here just momentarily. Please chat in. Let me know that you hear us all right. Again, you can chat directly in. I am here just waiting on that. Feel free to also to let us know where you're joining us from today. I would appreciate it. Just kind of curious. So make sure everybody hears me all right. In a moment, sees me all right. All right, a few informalities as we get off and running over here. Yeah, excellent. So I do appreciate you guys chatting in right now. As I was saying here moments ago, a few informalities as we get up and running today, and then we'll get off and rolling on today's presentation. Of course, inflection point trades. Just reading some of the chat right now. By the way, as I say, a few informalities, a couple things right up front that you should know. Number one, you can ask questions. Excuse me. You can ask questions throughout the course of today's presentation. I am watching chat here in real time. So number two, people always ask me if this is live. It's live. So how live is it? Well, right now the S&Ps are up some 55 points, but give it a moment. If you don't like the marketplace, well, again, give it a moment. Everything can change at a moment's notice. So yeah, no, thanks for joining me here. So a couple of people from Texas. I didn't expect too many people from Florida on today. So there's a question in here: did the hurricane affect me? So no, I'm pretty far out in the middle of the Atlantic. I'm broadcasting today from St. Croix in the U.S. Virgin Islands. We live here, and I frankly I like to be here during storm season to keep an eye on the place. So. Wow. Oh, Speedo Stan. Haven't heard from you for a while, all the way from Hawaii. So anyway, I'm out in the U.S. Virgin Islands. I was hit by Fiona when it's still just a tropical storm. We lost power for 5 days, but here in the Virgin Islands, we're kind of prepared for it. So I was on generator for 5 days. We used about 89 gallons of diesel fuel. Wasn't thrilled about that, but other than that, it's the first kind of mild storm that I've gone through. It was a starter storm for me. So this is now, I'll live here 2 years to the day, October 1st. So interesting stuff, huh? I've been out here for 2 years in the middle of the Atlantic. This will be my third October here, and I've avoided storms until basically like a week ago. All right, let's excellent. I appreciate you guys chatting in. Let's get off and rolling today. Again, we're going to be talking a little bit about inflection point trades, high probability income generating system. For those of you that are a little bit newer here, again, my name is Don Kaufman. I'm going to be with you here for about the next 90 minutes or so. We're going to go at a pretty quick clip. So sit back, pay attention, because we're going to go through a lot of material. This is a copyright disclaimer. This is mine. This is not yours. Listen, the reason I put this up here, if you need to get a hold of me after today's presentation, excuse me, go to support@theotrade.com. There's one thing I'm very adamant about. We answer emails here. Okay. The average, email gets answered within about, excuse me, 17 minutes. So support@theotrade.com. Just put Don in the heading if you want it to go specifically to me. Just have a general support question. They'll get it knocked out in no time at all. Actually, ironically, I shouldn't say that. So one of our lead support people happens to be right in the path of this storm. So he's, I'm sure, listening right now, but he's actually located in none other than just outside of Orlando. He he might not be so quick to respond today or tomorrow. Next, risk disclosure. We're not financial advisors nor a broker dealer. One of the primary reasons I put this up on the screen is I did spend 15 years in the brokerage business, and I am out of it. Listen, this is why you're here today. So we're going to discover a strategy that thrives absolutely thrives in the midst of extreme volatility. One of the things that I implore you to understand is that a marketplace, okay, like we are in presently, with a strategy like we're going to deploy and learn today, you literally are screaming like, let's go faster. This is what it's designed for. Okay. Second point over here, learn to embrace Federal Reserve interest rate chaos and recognize, okay, how bear markets and volatility can actually benefit, okay, even the most novice traders. Obviously, everybody is concerned about risk right now. It doesn't matter whether you're long, whether you're short. If concerned about risk, cover yourself with a single strategy that has risk reduction, while generating monthly income. Number 4, real capital, real trade, stock is cheap. One thing I just want to be adamant about here, number 4, when you come here to Theo Trade, when you see anything that I specifically do, we take a very no holds barred approach. That is, we show you everything. When I say everything, you can see any of the trading accounts that I have. Okay. I will talk about profit and loss till I'm blue in the face. You get to see every position. I do not mind, and I kick off with this. This is profit and loss. If you look down, okay, the right side of the screen with me, and this is the Thinkorswim platform. If you look down the right side of the screen with me, you can see every place that I've made money, every place that I've lost money, my year-to-date total, okay? I'll describe that a little bit more. So year-to-date total, I am up $200,000 in this account. Of course, and inevitably, everybody asks how much is in the account. Here you go. So it's hovering just about $373,000. So net, it's pretty dramatic, profit and loss, profitable year in this particular case. But every detail of every position, all P&L, everything for commissions, I show everything. It's just, I think it's one of the most critical things. I get that out of the way. By the way, I use Thinkorswim and I use Tastyworks. Again, no holds barred approach on both sides of it. Every account, every balance, we let you see it all. And it's one of the most critical things that you guys understand about a marketplace. Very few people that come out and do any kind of webinar would ever show balances and so forth. And of course, me showing you my balance is not indicative of exactly what you're going to make. I've had some experience in there. So, by the way, Warren, it said there was a loss in Meta because there was a gain in Facebook, man. It's because it transposed symbols this year. And you are absolutely correct, but it transposed symbols. So there was a profit in one and a loss in the other. Obviously, we're going to talk a little bit about small accounts. You do not have to have a $400 or $1,000 account, or we just filtered through a couple of accounts of several $1 million broken into a number of accounts. We're going to look at small accounts, retirement accounts, $2,000 or more, okay? And you can do anything that I'm doing, $2,000 or more, and you can do anything that I'm doing. And I want to make that very clear because I spent 15 years in the brokerage world, as I said a moment ago. You couldn't do any of this stuff 5 to 7 years ago. A lot has changed. Number 6, you're going to find a monthly income strategy your portfolio just simply cannot live without. Inflection point trades are precisely what people have been looking for in the midst of volatility. This is an auto expected move indicator. Excuse me. Stay right with me until the end of today's webcast. And I mean right with me to the end of today's webcast. And I'm going to give you a link to this particular indicator. So there's an indicator, not only do I feel strongly about, it's just something that I use incessantly. In fact, you know what? I have screenshots. Like I always show you, oh, here's the expected move indicator. This is what you get. Forget screenshots. And I'm serious about that. Forget screenshots. I like to do these sessions during the market. I'm going to bring up the SPX, the mother of all products. Here's the SPX. This is expected move. And what it basically shows you is this is how option markets depict risk, meaning that, okay, this is the upside of the expected move, the downside of the expected move. You go, what's expected move based on? Based on option pricing. It's forward option pricing. And what those lines represent, this is what the option market, okay, expects us to move. And if you look in the previous couple of weeks, we've had these huge, what we term breaches of expected move, huge, okay? And what that is basically the market getting ripped apart at the seams. And you go, oh, that's kind of interesting. I didn't know that. Well, most people don't look at this. The option marketplace is handicapping forward risk. When the option marketplace gets it wrong, pretty phenomenal. It also says a tremendous amount about risk in the markets. That's the auto expected move indicator. It is yours free. It's a $500 value. And I'm telling you, stay with me right to the end of the webcast. I will provide you a copy specifically of that expected move indicator. All right, onward and upward there, a couple of housekeeping items here. So housekeeping, shut the door, turn off Skype chat, whatever else is distracting you. Listen, as I said, take a no holds barred approach here. I'm going to fly through a tremendous amount of material today. As such, I urge you, focus, because you're going to need to focus at the clip that I'm going to move. I have a huge amount. I've actually added slides to this. Inflection point trades, okay, have been a system of trade that we've been using pretty much ever since post-COVID, volatility kind of kicked off. And it's something that it's going to take a little bit of concentration. If you're a little newer to this business, okay, you're going to have to focus. So you took the time to be here. This is important. Focus on being here. Definitely kick out the kids, the grandkids. The dog can stay. Here's a little bit about me. If you're unfamiliar with Theo Trade, how many people here are brand new? Honestly, just, yes, I'm brand new. I have no idea what a Theo Trade is. Anybody brand new? So I'll give you a little bit of a background on me. Sometimes take this for granted because I've been in the industry for a long time. People constantly ask, like, how did you get involved in trading? I grew up, okay, in this business. So I grew up in the business. I grew up around traders. I had family that were market makers. They owned a huge trading firm in Chicago. It was called O'Connor and Associates. They sold the firm for a multiple billion-dollar transaction in the early 90s. That was, again, billions of dollars in the early 90s was huge. And the firm that actually bought them was none other than the Swiss bank. Nevertheless, a couple of years after that, right out of college in the late 90s, I went into the trading world. And I stayed there pretty much ever since. If you put a 22-year-old kid on a trading floor, they're never going to leave. Shortly after I actually went to Chicago and worked there, I was invited to a startup brokerage firm. They said, you're young. If you want to come on, we're hiring a couple people. We have no idea what if this thing is going to be a success, yada, yada, yada. I'm like, what's it called? They're like, Think or Swim. And I'm like, dumbest name I've ever heard, but let's do it. It was a couple of buddies of mine. So let's do it. So I went to work for this nothing firm called Think or Swim. I went on full time with them roughly in 2001. I was doing some contracting work before that. Yada, yada, yada. I made it to the executive team there. We took the company public in 2007. By 2009, we were acquired by TD Ameritrade. At my time, both at Think or Swim and TD Ameritrade, I built the entire education division of Think or Swim. I worked extensively on the Think or Swim trading application and a lot of its tools. I then went on to run education for all of TD Ameritrade and at the time, 7 million clients. So it's a little bit of like my background. I spent time obviously at Think or Swim and TD Ameritrade. Listen, when it comes to this industry, I've seen it all. Like when I say I've seen it all, if you've done a trade in options, if you've tried to trade stocks, futures, currencies, I've seen it all. Like you guys have to understand something about me. The buck stops here, okay? I know what you've done in your account because I got to look at it, right? Like think about that. The way that I built education, both at Think or Swim and TD Ameritrade, I was looking at customer accounts. And I'm not talking about like I just open up like, hey, let's look at Mike's account. It didn't work that way. We use big data. If you've ever traded a covered call, I can tell you the probability of having made money in a covered call. If you ever traded a strategy called an iron condor, I can actually tell you the consequences, okay, and the reality of iron condors. If you ever traded futures contracts or currency contracts, okay, I even have statistics on crypto. You name it, okay, you name it, we're familiar with it. What you learn here today and what you learn moving forward comes, okay, from that knowledge of having watched billions in others' mistakes. But more importantly and more appropriately, what works best for retail traders, okay? And you're a retail trader and I'm a retail trader, like no longer market makers. I hate the idea that anybody's ever learned trading from a market maker. You know what you learn in a market making environment? To scream, to yell, to fight, to bite. That's market making. This is retail trading. And we're going to discuss expressly that. Again, if you ever need to get a hold of me, support at theotrade.com. I do some TD Ameritrade appearances. It's crazy, but this is the last time I was in Chicago. August of 2019 is the last time I was in Chicago. I spent a lot of my life going back and forth to Chicago. Again, as I said, I now reside in none other than the U.S. Virgin Islands. I spent a little time in Arizona in the summer months or winter months. I don't know. It's confusing. I do a couple of CNBC interviews from time to time. This is obviously one of the most memorable. Myself pitted against Kevin O'Leary. Get down to business. Volatility has arrived. Okay. And it's not going to abate anytime soon. I hope you guys realize when I say volatility has arrived, I'm not trying to freak anybody out. Listen, here's the bottom line. Okay. The bottom line, volatility is here. Embrace it or you're going to die trying. It's inflation's running red hot, still is. Fed pushing rates higher. It's contracting the balance sheet, or at least trying to. They're not doing a very good job of that. By the way, if you missed what happened today is the Bank of England turned around and actually unbended knee, basically said like, we're in trouble. They unbended knee, turned around, and now they're going to do quantitative tightening and quantitative easing at the exact same time. There's no other way to put it. It's absolutely complete and utter chaos. Geopolitical risks, they're proliferating, strong dollar, exports, inflation. By the way, the dollar could not be any stronger than it was this morning. The Bank of England changed all that. If you take a look at the dollar, it's finally coming down. It's a miracle. Anyway, yeah, give it a day. Give it a day. See what occurs in here. Nevertheless, okay, that volatility, it's arrived. Game on. You got to embrace the chaos. There's one thing that I implore you to understand. You can't sit here and like fear the volatility. Again, you got to look at this as a roller coaster and just be like, faster, faster. Markets got real in 2022. This is what markets are about. I mean, what is it before that? It's been a one-way ticket to the upside. Okay, a Fed-fueled fantasy marketplace. Nothing's reality. All of a sudden, it's real. It's reality. Stock picking. It's done. Reddit boards, you're done. Okay. There is no buy the dip. Actually, this is actually categorically speaking, the worst buy the dip year thus far since 1931. You're going to need a strategy. Okay. That number one, embraces the chaos and volatility. Number two, doesn't rely on directional bias. If you think you're going to be able to handicap volatility, I don't think people understand, okay, what volatility is. All right. It basically says, I'm back, get back. Dangerous. It's a wild animal, right? And you've got to learn to also reduce risk while substantiating monthly returns. And that's exactly what we're going to do over here. So how are we going to do it? Inflection points. Okay. Inflection point trades. Higher volatility has resulted in significantly more options premium. Okay. Now I said the O word. Now some people are not familiar with options. Some people are just vehemently like stubborn about it. Listen, the argument that I'm going to make here is a very simple one. I'm not going to sit here and drill you and be like, you have to trade options, because some people are just never going to do it. I get that. But I want to make the argument that that's a much softer, gentler, kinder way to trade in the midst of volatility. Okay. When you have more volatility, option premiums go where? Up, right? The one thing, like people can never agree on anything, but I think you could agree on this, right? Look at VIX. Right. Even today, I look at VIX. VIX is, even though it's come down today, it's very, very elevated, right? It's very elevated VIX. In fact, if you look back over the last 10 years, we are at a statistically significant level of volatility since the onset of COVID. And that's exactly when this particular strategy is not like, yesterday's hot topic. This particular strategy isn't last week's like, hot topic. This strategy, okay, has been in play since the onset of COVID. And we have been using this extensively, okay, in doing so. So as we talk about inflection point, okay, you got to know higher volatility helps us. Okay, if volatility does collapse, we're okay as well. Now, inflection point spreads. What we're going to do with this is they're designed to sell options premium while reducing risk. Okay, one trade, one hedge, and one end goal. Think about this. We're going to go out there and we're going to sell the meat of the market. So the bigger the volatility gets, the more we're going to sell. But at the same time, I don't want to just go out there and put you at risk. Sounds easy enough, right? Let's just go out there and throw some risk at the marketplace. You're going to get crushed sooner or later. You got to go out there. You got to sell and reduce risk, sell and reduce risk. And that's exactly what we're going to talk about. We're going to talk about one trade, one hedge, one end goal, make money. That's what you're here for. Okay. We're going to teach you to sell options. So a lot of people have heard through the grapevine, and people always hear this through the grapevine. Even if you're new to options, they go, oh, I heard selling options. Okay, that's a great way to make money. How many people have heard that? Okay, how many people have heard that through the grapevine that selling options is a good way to make money? Just a Y for yes and N for no, right? There's a lot of people on today. So, and it doesn't need comments just yet. I can see some people commenting in here. Okay, so some people have heard it, and some people are not necessarily familiar with that. So the funny thing is, and I put this right here in plain text, but selling options is a wonderful way to make money. But if you don't know what you're doing, okay, you're going to get hit by a Mack truck. If you've experimented with selling options, okay, anybody in here that's experimented with selling options has had a interesting experience. They make money, make money, make money, make money, hit by a Mack truck. You go, oh, I don't like it. Okay. That happens to everybody. What we're actually going to do is teach you to mitigate those risks. You're going to control risk. Today's session, okay? Anybody, by the way, has anybody had that happen? Come on, people admitting it's the first step today. All right. So you've got to do this. You got to do it right. Today's session is going to separate myth from real risk, fact from fiction. We're going to talk extensively about selling options premium. Okay. And again, I like it. I resemble that remark. Yes, I read in real time over here. So let's get down to it. Now, some of you have absolutely no idea what you're doing. You've never even heard the term sell, much less option. Don't panic. You can do this. Okay. And I'm serious about that. Like if you've never had experience with options, anybody here no experience with options, you're like, what are you new? You can say, I am new, right? That's okay. Once again, like, you got to make this the 12-step program for trading. I am new. I have no idea what I am doing. It's a good start. First of all, if you know nothing about options, that's okay for today's session. For starters, you want to grasp big concepts. Not one person came in here and said, I'm new. Everybody's experienced, right? So for starters, look to grasp big concepts, probability, risk. So if you're new, you want to grasp big concepts, probability, okay, how to get high probability trade and how to manage risk. If you're experienced, and it looks like just based on some of the comments in here, some experienced traders. If you're experienced, you want to listen to the more granular details. Like I actually get off into the weeds and I'll get into the granular details. So I kind of geared this for, those that are new, those that are a little bit inexperienced. The one thing, again, I implore you to understand, you're going to question throughout the course of this presentation about margin. Don't worry about margin. Okay. It can be done with small accounts under 5K. It's fine. Okay. $2,000 in a regular margin account, and you can do this. $5,000 in retirement accounts, you can do this. Let's dive right into it. There's a lot of different facets to selling premium. Okay. Selling premium, what does that mean? First of all, selling premium, you can refer to it in a number of different ways. Selling premium means selling premium, selling options. Some people talk about selling juice. You guys ever heard that? Okay. Juice is premium. Selling premium, credit spreads, short call spreads, bear call spreads, bull put spreads, delta neutral trading, selling naked. I like to use the term selling naked just because it sounds exciting, exhilarating. Selling premium can be both bullish and bearish positions, but generally they're considered much more market neutral. So one aspect of today's session, and again, I implore you to understand that today's session, you're not going to sit here and go, is that done with the MACD or the Fibonacci? You're not going to see that here. Okay. I like to make the statement right up front. I'm a quant. I grew up a quant. I'm always going to be a quant. What a quant means, for those of you that have no idea, it is a quantitative trader. If there's not mathematics and probabilities, I just don't care. Okay. I am more than open to listening to you. I am intimately familiar with every charting package out there. Okay. I know all the technical studies. Why? I helped build the Thinkorswim charts. All of Thinkorswim charts reported through my division in Thinkorswim. So I'm intimately familiar with this. Okay. Nevertheless, ain't going to see no stinking charts here today. It's not going to be a chart. Why? Because I just don't care. Right. We're going to get into and we're going to sell premium. By the way, I asked this question literally yesterday. All right. Fibonacci's. Okay. I got your 618 right here, buddy. I asked this question yesterday in our chat room, how our members are doing year to date. This came from Brian. Doing awesome since Professor B got my head on straight. Profits over 100K so far. This is Eric, up 27% year to date. This is Zay, started my IRA in June following Theo's small methods, up 28%. Good stuff. Steve P, up for the year in accounts I'm trading. Marianne, thanks to Theo, took my entire 401k to cash 18 months ago, right? By the way, we saw a lot of this coming. This one comes from Michael Phipps. I'm amazed by something every day at Theo Trade. It's the place you want to be. And I just threw that up there because I wanted you to see, like, these are individuals that not only aren't down, they're actually up on a year-to-date basis. All right, down to business, probability and profitability. One of the things that I have to start today's session with, again, being a much more quantitative trader, I start today's session with your trading is based on probability. That's one faction that people kind of miss. People, like, they email me every single day, like every single day I get an email. How often you're right, okay? Well, here's the thing. You can create trades all day long with a 90% probability of success, but you can still lose money. Like if you look, if you look at, probability alone and you go, well, this guy's right more than 70% of the time, that doesn't imply that he's making money. Probability alone does not make you profitable. You have to remember that. Does that make sense to everybody? Because it freaks everybody out, right? Because you could be right 90% of the time, but the first thing you should be thinking is what's going to happen to you what? The other 10% of the time. Like real traders, okay? Profitability takes care of itself. It's the risk you have to worry about. I'll say that again. Profitability takes care of itself. It's the risk you've got to worry about. You better remember that. Ready to sell options premium. Selling options premium, okay, is more than finding a high probability trade. Anybody can find a high probability trade in a matter of seconds. Like I can actually go onto any trading application and give you a high probability trade like that, seconds. But inflection point spreads, it's a system. You got to find, trade, and hedge all in one transaction. Find, trade, hedge, find, trade, hedge. Okay, let's get into it. So here's our first, I guess, dive, if you will, into a little bit about understanding what it is that we do to achieve degrees of profitability in the midst of pretty much chaotic markets. So this is a $100 stock. By the way, I call every stock, like my fictitious stock is always called stock. Okay, stock. Why do I call it stock? I don't know. Okay, because I'm a unique individual. Stock. And then I find out that there's this like coffee drink called stock, and okay, I'm damaged about that. I'm horrified. Anyway, stock. So you have this $100 stock. Now, the first thing I want to talk about is, do I own stock? And the answer is no, I do not. No, I do not own stock. Why? If you have a $100 stock, okay, and it's like, Apple, you're going to get decimated today. $100 stock goes higher or lower. I mean, the risk in here, you go, well, that's okay. I have a stop order. How is a stop order going to treat you? Like in a situation like Apple. I mean, Apple yesterday, what did it close at? Like 153 and change. What did it open at today? 149 and change. I'm serious. Like, how's the stop order going to treat you? Like, you think you have your risk defined. Okay, but you don't. There's nothing defined about volatility. You guys know that, right? Nothing can be defined. You're going to go out there and you're going to put a measured amount of risk. So I'm not going to own stock. Okay, so now we're going to start talking about options. So this is a $100 stock, and instead of trading the stock, I'm going to trade options. In this first trade, I'm going to go out there, okay, and I'm going to talk about buying, not selling, but buying a 120 call. That 120 call is going to be trading for exactly $1. Now just time out for a second. Let's just say this little call is good for 2 months. So I'm going to buy a 120 call. Now, some of you are brand new to this. You have no idea what a 120 call is. Well, here it is. A 120 call. What does a 120 call give you the right to do? It gives you the right to buy the stock at 120. Why would I want the right to buy the stock at 120 if the stock's trading at 100? Anybody? Question mark. Why? Okay, buy the 120 call if the stock's trading at 100. You must think, okay, that this stock is going to soar. It's going to be the next, who knows? Because you're thinking like, maybe you shouldn't buy a call, Don. Maybe you should buy a put. I get it. And you're actually right. Okay. However, All right, with all due respect, for the first example, for those of you that have no idea what an option is, I like to use calls. By the way, I'm going to talk a lot about calls. Calls are easier for people to comprehend. For those of you that have never traded an option before in your life, calls give you the right to buy. Puts give you the right to sell. But what's weird about puts is you go, okay, so they're the right to sell. Yes, a put's the right to sell, but you can sell the right to sell. And you go, selling the right to sell, it's a double negative. It is. That's why it's kind of confusing. So let's just talk about a call to begin with. So does that make sense of why I'm just focusing on the call? So I'm doing this long enough that the calls are just easier. If I buy a 120 call, it gives me the right to buy the stock at 120. Do I really want to buy the stock at 120? No. Then why do I buy the call? Just in case I want to buy the stock at 120, but you never have to buy the stock. If the stock goes from 100 and soars to 140, okay? Stock soars to 140, you have a 120 call. The 120 call gives you the right to do what? Buy the stock at 120. Do you have to? Do you have to? Okay. Buy the stock at 120? No, you don't have to buy the stock at 120, but you have the right to buy the stock at 120. If you had the right to buy the stock at 120, could you buy the stock at 120? Yes. You go, oh, you could buy the stock at 120 and sell it at 140 and be able to make how much? You could make 20 bucks. Okay. But you never have to do that because instead of buying the stock at 120 and then selling it at 140, you could just sell the 120 call and they'll give you a minimum of $20. That's how the market works. Okay. So instead of buying, okay, instead of buying the 120 call, now we're going to take it a step further. Now we're going to go out there and we're going to talk about sell the 120 call. Okay. And for that, we're going to collect exactly $1. So I'm going to put that down here. We're going to sell a 120 call. And the 120 call is going to be trading for exactly a $1 credit. Okay. And let's put a time frame to this one. We'll say this one's as far out as 3 months. Okay. I like to torture people. So I'm going to sell a 120 call. First of all, some of you look at this and they go, but selling a call is high risk. I get it. It's high risk. Of course it's high risk. You're just selling a call. This is what we call selling naked. Would you want to do that? Probably not. Not in this marketplace, right? So you sell a 120 call. Okay. But I don't want you to worry about risk right now. First of all, I don't want you to worry about risk. We got to talk about probability and profitability first. Then we're actually going to worry about, okay, reducing risk. So I need you to understand that we're going to go out and we're going to sell a 120 call. Go, oh, okay, but what about margin? I don't worry about margin and don't worry about risk. Okay, but there's gonna be margin and risk. Okay, I got it. I got it. I'm not new. Okay, don't think I'm gonna miss any edges over here because I'm not. I'm not gonna miss the edges. I'm all about the edges. But what I have to teach you is the core logic. What's the core logic? If I sell a 120 call, okay, if I sell a 120 call, first of all, you got 3 months. You're gonna have to wait 3 months to make $1. You're like, that trade sucks. I get it, but I need you to understand from a probability point of view, what could happen here? If you sell a 120 call, first of all, some of you are probably thinking, you're like, wait, I never owned the 120 call. How does one sell something that you never owned? Okay, you're opening the transaction by selling the 120 call. The cool thing is in options, you could be a buyer or a seller from an opening standpoint. I can open a trade by buying the 120 call. Buying the 120 call gives me the right to buy the stock at 120, or I can open the trade by selling a 120 call. If I open the trade by selling a 120 call, that gives someone else the right to take stock from me at 120, right? So let's say I go out there and I sell a 120 call, just in the open market, sold, okay? So I sell the 120 call, I collect $1. By the way, what's the most I can make in the trade? If I sell something for $1, what's the most I can make? $1. Nobody comes back a week later and goes, that was the best call that you ever sold me. I'm going to give you an extra $1. It's like selling a used car. You're like, oh, I got rid of that piece of crap. Okay. So you sell this 120 call for $1. The most you can make on it is $1. Okay. Right. Sell the 120 call, but you're obligated now. Obligated. It's a big word. Obligated to do what? Give somebody stock at 120. You go, but I don't own any stock. I know. So what can happen here? Stock can stay flat. So if it stays flat, you make $1, right? If the stock goes down, what happens? You make $1. If the stock goes up, what happens? You probably make $1. If the stock goes to 120, what happens? You wet yourself, you still make $1. The only way you start losing money is at 120 plus the $1. So like 121 is kind of your break even, okay? What is the probability embedded in this trade? Okay, what do you think the probability in this trade happens to be? See if you guys understand a little bit about probability. Because the interesting thing is, when you're talking about trading, everybody's like, I want the highest probability trade. Yeah, but higher probability can actually be equivalent to more risk. What do you think the probability is? We will not go on till I get some answers. Okay. Oh, this is way higher than 68%. It's a really high probability. Okay. If you think about this, stocks trading at 100, we're out here. You have to go up 20%. That stock has to go up 20%. Okay. To go way out there. It's got 3 months to do it, but 20%, you got to realize when you're 20% out of the money, by the way, there is no perfect answer for this. Okay. I was just expecting you guys are going to say it's like a higher probability. There's no perfect answer. If this were real, you're 20% out of the money, 120, yada, yada, yada. This was an equity product, 3 months. This trade would actually have upwards, okay, of a 97% probability embedded in it. You go, how could you figure that out? The distance from here to here, the number of days to expiration, which is basically 90. Okay, I can imply that the volatility here would actually be pretty good, pretty fairly high, but still it has to make a 20% move. That'd be huge. What I want you to see though is with a 20% move, there's a couple things you have going for you here. You know what you have going for you here? Okay, I'll tell you exactly what you have going for you here. As that stock starts to come up, I mean, you could take, evasive maneuvers. I mean, you could hedge because the stock has to rally by 20% for you to lose money. Can that happen overnight? It could. Not likely though, but it could. Okay. Let's blank the screen for a second. Are we okay? Are we okay? By the way, I love that answer. 98.6% profitability. Okay. So the temperature is right for you, sir. I like that. That's a good answer. Okay. Sarcasm goes a long way with me. Let's go over to a real marketplace. Let's show it. Let's show this in a real marketplace. Because one of the things that you have to start to understand is, let's go to the spiders. And I'm going to go back and forth. I'm going to go to the spiders. By the way, everybody here familiar with the spiders? Spiders right now are up like $5. Okay, the same as the S&Ps, same as the SPX. They're all basically the same animal, right? So we go to the spiders. Spiders are on a rip and rally. They, by the way, if you look at the spiders lately, okay, where have the spiders gone? Down. Okay, where do the spiders like to go? Down. Okay, it's good stuff. Thank you. Thank you for that interpretation of the spiders. Okay, we're going to go out and we're going to go out a full, let's go out to 114 days. Because by the way, I have positions in here. I will never, ever discuss something that I am not executing within, and you should know that. I have positions here, okay, in the spiders. I have positions in the spiders, the S&Ps, the ZB. Then I have more positions over here on Tastyworks, spiders, S&P, okay. Got some pretty good amounts of risk on right now. Nothing huge, nothing too crazy. So in the spiders, I'm going to go 114 days out. I'm going to go 114 days out. Where am I going to go? Where am I going to go? Where am I going to go? That works. Oh, crap. I actually have a position right there. Oh, you know what? I won't use the one I have a position in. Okay. Because I actually do have a position. That's what that POS means. Position. What do I have on here? Okay. I'm short a 10 lot in there. So let's go out here to the 445s. 445s. The 445s are trading, okay, for about $1.10. Let's just call it $1.10. I'm using the ask. Okay. So you could go out there and sell the 445s for $1.10. What's the probability of you making money? So I can come over here to options, theoreticals, and Greeks, and I can go probability OTM. That means probability out of the money. That trade is a 95% probability of making 1 penny or more between now and expiration. That's the exact definition in here. Okay. So that has a 95% probability. Does it mean you're going to make money? No. Does it mean you're going to make money often? Yes. Does it mean you could still lose money? Yes. The trade has a 95%, right? Okay, now what are you going to do? Well, you're going to sit there and do nothing. You're tortured because this is 114 days out. But you got to understand something. Selling options equals positive decay. When you sell options, every day that passes sees the dwindling of an options premium, right? So as time passes, the options you sell decay exponentially. Everybody familiar with this? Again, I'm just, I'm doing this based on feel for you guys. So you go out there and you sell something and it's supposed to decay. So let's take just a moment to review time decay, because one of the things that really, really bothers people that understand this business, what are you bothered by? I'm selling an option that has what? 114 days. And I have to be honest with you, I intentionally, today's example, I went even further out in time. Why? I want to torture you. Okay. I want you to understand that most people have no idea what the hell they're doing in this business. Okay. Because if you ask somebody what they're selling right now, they go, you're going to sell option premium. You got to sell short duration premium. Why? Because short duration premium decays like this. It accelerates, man. It accelerates. Yeah. So does the risk. The risk accelerates. So everything you do in this business is a trade off. If you want, whoops, okay, if you want faster amounts of decay, I messed up my screen, okay? If you want faster amounts of decay, you're going to do what? Yeah, you're going to have to take a lot of risk effectively to do so, huge amounts of risk to do so. So most people are familiar, okay, with this. What is this? This is a decay graph, okay? Seriously, how many people have seen, how many of you have seen this decay graph, okay? Come on, everybody seen it before? Anybody, anybody, anybody. I just want to make sure that we're all on the same page, all right? I want to make sure that every one of you are on the exact same page. Great. What you learn is that options decay, what's termed the square root of time, okay? You also know that this decay graph is absolutely unequivocally worthless. I'm going to tell you exactly why it's worthless. It's worthless because these are what we term at the money or near money options. Are we looking at a near money option? No, we're not looking anything at anywhere near the money. Okay. So everything you've ever learned about a decay graph, I think you should throw it out the window. All right. So what we're going to discuss over here, okay, is that typically traders sell shorter dated options. That's why you're tuning into this webcast. In my example, okay, I've gone further out in time. Now you're going to start to see, why did I go further out in time? Okay. We're going to come back over here. And again, we're going to go all the way 3 months out. But you know what? I think you guys are ready. What are you ready for? You're ready for me to do it in a live market. Okay. So in spiders, I don't care that the spiders are up $6 today. Your directional bias does not matter. What I want you to look at is 114 days from now. I'm going to go out and I'm going to sell this option. Oh, this is perfect. It's perfect because it's really trading at $1.10. So we're going to go out, okay, and we're going to sell, right? And this is a Jan expiration. It's Jan 20th expiration for, and I'm going to sell this Jan expiration specifically. This is the 445 call, and it equals $1.10 credit. Okay, time out. That's it. Now what do I do? So he goes out, he sells an option. I can't sit the entire time. He goes out, he sells an option. Now he has to sit there for 114 days. Sit there for 114 days and go, come on, man. To make like $1.10. That would be brutal. That's not what we're going to do. For the first example here, assume that all factors being held equal, the market stays flat. The market's not going to stay flat. Market's going to rock all over the place. It's neither here nor there. The point that I want to make over here, though, here's the point I want to make. This option that I sold 114 days from now is going to burn, baby, burn. That thing is going to burn fast. And you go, what do you mean it's going to burn fast? It is not going to burn fast in 114 freaking days. If it has 114 days, Don, it's going to decay very slowly because I looked at a decay graph and you're absolutely positively incorrect with that. Even experienced traders get caught by this, okay? Because we're not selling a near money option. We're selling a way out of the money option. And initially I'm selling it naked. We'll talk about reducing risk. By the way, don't worry about margin because everybody's like, what about the margin? Okay, don't worry about margin. Close that up. See this 114-day option? It's 445 call. I sold it for $1.10. I'm now going to look at the 79-day option. Why the 79-day option? Because it's like fast forwarding in time. I can get that out. You're going to fast forward in time. You're going to fast forward exactly, let's call it 30 days. I know this is not 30 days. What is this? 35 days. It's exactly 35 days into the future. 35 days. What's the option worth 35 days from now? Okay, because you believe that there's no decay. Okay, 35 days from now, what's the option worth? 54 cents. So 35 days from now, I'm going to buy back, okay, the Jan option. I'm going to buy back the 445 calls, okay, and I'm going to buy them back for roughly, let's make it 55 cent debit. right? What did I make? 50%. How long did I wait? About 30, 35 days. In 30 days, you have to be able to make over 50%. Works, doesn't it? You go, that's kind of crazy. So why am I using an option so far out in time? I'm using an option so far out in time because who cares? Like, do you really care how you make money on a month-to-month basis? You go, no, just as long as you're doing what? Making money month to month. So if you want to get cute and sell an option with 30 days remaining to expiration, you're going to get killed. Think about this. Okay. If you sell an option that only has 30, let's say 35 days remaining to expiration. If you sell an option that has 35 days remaining to expiration, you wanted to collect about $1. Okay. You got to come here to the 405s. That's not that far away. That's not that far away. That market can grab you. And the next 35 days, you're going to sit there, you're going to go, oh, and you're going to get killed. Eventually, you're going to get absolutely killed because what you're basically doing is you're going to be fighting incredible amounts of what we term gamma risk. You don't have to geek out on that one. Me, I'm going to go out here 114 days. Okay. I'm going to sit in the nosebleed seats. Why? Okay. The cheap seats don't need a whole hell of a lot of hedge. I'm going to sit back and watch the chaos. Okay. I'm actually going to collect about 50% of premium of whatever I sell, and I'm going to get the hell out. I don't mind saying that. I am going to sell some premium. I'm going to sell that for $1.10. Okay. As soon as it makes about half, I am out of the contest. And I'll tell you what, 114 days, that's a little far out. Okay. A lot of things I can do in here. I could even do this 93-day expiration. This would be beautiful. But again, everybody's concerned about the wrong things. You're concerned about the fact that I'm selling naked. Don't worry, I'll mitigate the risk. The other thing you're worried about is margin. Don't worry, I can teach you how to circumnavigate margin. Like those are all things that you can alleviate. Are we okay so far? Does it make sense? Okay, are we okay? Because let's do another one really quick to make sure that everybody's good. Let's go over to the Qs. The QQQ, what is it? It's the NASDAQ 100. Why do I like it? I don't like it. I don't really care. Let's go 114 days out in here too. Same expiration. Okay, let's search for something trading around $1. Sold. So here's a 350. All right. So I'm going to go out there and I'm going to sell the Jan 350 calls. I'm going to sell those Jan 350 calls. And I'm going to sell them for, in this case, let's say like $1.07, $1.06. I mean, this is an easy fill, like even $1.07, but I'll say $1.06, $1.06 credit. Okay, wait 35 days. Boop, 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 boop. Wait 35 days. 35 days opens at 79. Let's look at the 350 calls. 350 calls, what are they trading for? Exactly 30 days from now. Oh, how nice. Okay, they're going to be able to buy them back for about 47 cents. So I turn around, buy them back. Whoops, my pen changed on me. Okay, I'm wild and woolly over here. Turn around, buy them back for basically, say 47 cents. Okay, what am I making? Oh, that's almost closer to 60%. Can you do that? Right? Can you do that? Because again, the whole key over here, though, is not only can we make 50% in the next 30 days, we're going to do it consistently, and we're going to do it with risk mitigation. Right? Are we okay? What I need you to understand, look at the probability in this trade. Look at how high the probabilities are. Okay, I come to the 114s and I go all the way out to the 350s. Look at this. Everything I'm doing is 95 to 97% probability. Everything I'm doing is 95 to 97% probability. I'm going to be able to make 50%. The key is, though, you have to know exactly how to do it, how far out in time to go. This is what we do here. Why sell options so far out in time? That is what you're tuning into this webcast for, because it's about criteria. There's been a dramatic shift, a change, if you will, okay, in volatility skew. The volatility skew is completely shifted. It has a lot to do with what we term, okay, Vega, VAMA, if you guys have ever heard those terms. Okay, it's a big volatility skew shift. The distortion is actually created, all right, volatility out of the money, way far out in time, the skew is massive. And what we do here at TheoTrade, let me tell you, anybody can tell you to sell options, sell options, sell options, sell options. You're not going to know what options to sell, how far out in time to go. More importantly and more appropriately, how do you mitigate the exposure? Okay, we can do this all day long. And by the way, I'm going to show you 18 months of results, because when you look, and I said, everything I do in here, I'm a complete and utter no holds barred approach, right? You get to see the account statement, right? Everything I do in here, $200,000 of premium selling this year, okay? That is, all right, the P&L. By the way, people are like kind of digging through this a little bit already. So if you're kind of digging through this, by the way, as I was saying, somebody said there was a huge loss inside of Meta. There's a huge loss in Meta. See it $77,000. But if you look at Facebook, I'm up 98. Some big positions in there. By the way, I'm totally and completely closed out of Meta. So the artist formerly known as Facebook. The fact of the matter is, again, if you look at profit and losses, okay, it's a no holds barred approach. You get to see what I do in every single trade that I do. Okay. So if I'm going to sell premium, you get to see it. And again, you can see each execution, what I have positions in, what I don't. Okay. And that's critically important. Listen, that's what you guys are tuned in here. Okay. That's what you tuned in here for. So what you have to be concerned about at this point, though, is how do I control risk? So let's talk about that for a moment, because on the surface, all I wanted to show you is high probability trade, making 50% every 30 days. See, people get this all wrong. They go, I got to make money every 30 days. I agree with you, but that doesn't mean you have to trade a 30-day option. Okay. Why don't you trade a 100-day option? It's kind of like, you're going to go out and you're going to ride a bike. Okay. If you're going to go out and ride a bike, have you ever gone, right? I don't know, 35, 40 miles an hour on a bike. You start going so fast, you're like, I'm getting speed wobble. I'm getting speed wobble. Okay. That's fine. What do? Maybe ride a bigger bike. Maybe ride a bigger bike, right? Go a little slower. You're still going to get there. Okay. But in this case, we're just going to ride a bike that's a little further out in time. And it's going to be that same 30 days. And we're still going to get there in almost the exact same time frame. We're just going to do it a little safer methodology. Now, what happens to a lot of people when they learn to sell premium is what I term, and this is the area that you got to focus on. This is what I term 90% probability and the 10% hammer. Okay. And you go, oh, that's an interesting slide. That's an interesting title. You know what? 90% sounds great, but 10% of the time, the market whoosh, rips your face off. If you've never heard the terminology, okay, of ripping your face off, you just haven't traded long enough. Rip your face off basically is alluding to the fact that when you trade high probability strategies, you make money, you make money, you make money, train wreck. And everybody learns to do a strategy called an iron condor. Let me give you my synopsis of an iron condor. Okay, I want to know right now, I'm dead serious with this. How many people here have ever traded an iron condor? How many people have ever traded an iron condor? You can just say yes, 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 me. So what an iron condor is, this is a marketplace, right? And it's the Qs. I don't care if it's Qs, whatever. Here's your market. An iron condor, go out there and you sell call, then you buy call, okay? And then you sell put, and then you buy put. What does the iron condor look like? Looks like that. Wait, I can't get it all in there. I have to like back up from the thing, okay? I can do a mime. Anyway, sell put, sell call, buy put. Okay. So what do you want to have happen here? Stay within the lines. The market does. Okay. And you learned this strategy and you went out and you took a class and you paid $500 to learn how to do this. Right. So what happened to you? So you took this class and for $500, they taught you an iron condor, the mighty iron condor. Right. What happens? The very first time you do the iron condor, you did it in a product called SPY. And in the SPY, okay, you do one contract. Captain One Lot rides again. And in 1 month, you made, okay, the full amount. You go, that was sweet, man. Of course you made the full amount. Why? Because the iron condor that you did had a 90% probability of success embedded in it. This trade doesn't have to be 68%. You can do this and be 90% probability. So the very first month you do it, you make money. The next month you do it in the spiders. And you step up in the spiders, you're like, you're like starting to do a little funky chicken, right? And you're like, oh, now I'm going to do 5 contracts in the SPY. So that's month number 2. And month number 2, 5 contracts in the SPY. Lo and behold, you make money. So now you're 2 months into this. First month you make money, second month you make money. Okay. You're getting good. On the third month you do it, you don't want to trade spider anymore. You're going to be bigger than that because 10 contracts in the spiders is the same as a 1 lot in the SPX. So you learn about this product called the SPX, AKA nobody tells you what it's really called. You want to know what it's really called? The mother of all products. Want to know why we call it that? Because you're going to get screwed. You just don't know it yet. By the way, just for you guys that have traded SPX, I was born in that pit, almost literally and figuratively, but that's where I traded, okay? The Widowmaker works as well. I prefer, though, the mother of all products because the SPX basically dictates whether you live or die every single day. That's what the SPX is. It is the mother of all products. So in the SPX, you go out and do one lot and you're like, oh, a one lot in the SPX is the same thing as a 10 lot inside of the spiders. And guess what? The third month in a row, you make money. You're just knocking it dead. You're 3 months in a row. By the way, in the fourth month, you go, I got this, baby. I'm going to be the next Buffett. You go into the SPX, okay, and you do a 10 lot. By the way, the SPX is just evil enough. It's like, come on, come on, come on. The moment you place that 10 lot, we're like, we got one. It's like a fire alarm goes off. The market gets freaking crushed. You wipe out not only every profit you had in the previous 3 months, but you actually end up taking 50% of your account with it. Okay. And if you've listened to this right now, you're like, holy crap, can that really happen? Can it happen? Please come forward if it's happened to you, right? And people go, man, it's like you could see my account. Yeah, I could. For 15 years, I could see your account. I've seen this before. Okay. You know how many times I've actually seen people like, I make money, I make money, I make money, I make money. Train wreck. Completely wipes out 50% of the account. By the way, in some cases, you're lucky if it only wipes out 50% of the account. Nobody ever wants to come forward and be like, yes, this happened to me. Okay. No, I'm just waiting. Every single person that traded an iron condor, there's a reason you're not doing it anymore, is there? Right? The reason you're not doing it anymore is because you experienced this. Am I getting somewhere? Again, this is the plight of the iron condor trader. By the way, so you took a class for $500, you learned how to do an iron condor. Then before you know it, check another class. After you get wiped out, there's another class and they go, I can fix it. I know I can fix it. So now you have to pay $500 to take a class to learn an iron condor. You have to pay another $500 to take another class to learn how to fix an iron condor. I'm so cynical regarding a fix. Okay. A fix is the most ridiculous thing. Anytime you're fixing a trade, it's more commissions and more capital at risk. Some fixes may work, but the very notion of fixing actually takes more good money and throws it down a very dark hole. You just don't do it. Like, by the way, people don't always call it fixing. Okay. You know, like what's fixing? Like what's one of the things you don't do? You don't throw more good money into a very bad trade. You go, I'm not doing it. I'm fixing it. I'm like, oh, by the way, I have to sound like completely degenerative when I say that, because that's exactly what it is. Instead of somebody telling you that you're throwing more good money down a very bad hole, they come up with interesting names like fix. My favorite is when I'm going to morph the trade. I'm going to turn an iron condor into a butterfly, into an amalgamation of what? Crap. You can't do it. You got to learn how to do this right, because when you fix a trade, all you're doing is taking a really nice car, driving it off a cliff, and then bringing it to a body shop. I know that sounds messed up. Okay. By the way, there's no adjustments either. Adjustment is even a worse word for fix, because you actually believe at that point that you can adjust to keep up with the marketplace. You can't adjust a trade fast enough. Like this morning, and I'm serious about this. I have an 8-year-old. He's about to be 8 this next week. I have an 8-year-old, and he woke up in the middle of the night last night. He was sick. So it was like 2 a.m. He comes in the bedroom and he's cooking. He's like 104 degrees. And it woke me up. Of course, my wife went and took him to the other room, but he wakes me up and then I'm awake and I'm actually watching the S&P futures, and they were down like 40 some odd points. And I'm like, this might be it. Like this might be the day that we just crack and burn, and we're going to wake up and the S&Ps could be down 200 points. Thankfully, I was already awake. But no, seriously, how are you going to fix that? How are you going to adjust out of that? You're not. You got to learn to do this right. You got to learn to do this right. You got to correct good trades gone bad. What you really have to learn, okay, is position structure, because you need a hedge in order to sell premium. And that's the bottom line. And I want to talk about this for just a moment, and then I'm going to show you how to do it, because this is what we're here to learn. Anybody could have figured out to sell options premium. Very few figured out to sell which options should you sell. By the way, okay, that is hundreds of thousands of dollars of capital at risk, okay, and incredible amounts of data sets that we go through. And you guys got to understand, TheoTrade, we're not a one-trick pony. This is not like a Don Kaufman show. We have 7 other full-time instructors, and Jeff Bierman and Brandon Chapman, okay, and Brian Aponte, and Blake Young, and I can go on and on and on. All the instructors, and Matt Williamson, Slim Miller, okay, they're all here. Corey Rosenblum, okay, all these individuals are here to help actually construct criteria. But as I was saying here, selling premium, you probably could have figured some of that out. What you really need to learn, though, is how to hedge, okay? One of the things that you don't want to do, you came into this trading world naked, but now you need a hedge. Selling naked puts, okay, or naked calls, all right, with no hedge, and said no one questions the naked pig till he's served up for dinner. We need a definitive hedge. The way that I think of a hedge is this: we want to go out and we want to sell options, okay? We want to sell options, but in doing so, there's a cost of doing business. And the cost of doing business, hedge. A lot of people are like, is that the little bush out in front of your house? Yes, that's exactly what it is. No, the hedge, the only way to think of it in my mind, I think I think of this differently now because I live on an island. It's a sacrificial lamb. Okay. Hedging is a sacrificial lamb. Okay. We must sacrifice a lamb. We must sacrifice the lamb. Why? If you don't do the sacrificial lamb, like you have to like feed this lamb to the volcano, or it will get angry and come after you. The one thing you need to understand is that hedging is a sacrificial lamb. Does it have a cost? Of course it does, but it's a cost of doing business. Like what we want to build you into, and I'm going to show you in a moment, what we want to be able to do is to make you quote unquote the Amazon, all right, of selling premium. The whole key to selling premium is working through inventory. It's inventory management. This is not about this is MACD and the Fibonacci and the Bollinger Band. Like you got to forget all that stuff right now. Okay. And by the way, it's fine to have directional bias. Okay. We have like Slim Miller and Jeff Bierman. Okay. Jeff Bierman built the Thinkorswim charts. That guy's forgotten more about technical analysis than most of us will ever know. He's also a finance professor at DePaul. Okay. And he moonlights with us on the side. But the bottom line is, okay, in premium selling, that ain't gonna help you. Okay, it's not gonna help you. It's not gonna be your saving grace. And I'm totally cool with technical analysis and you using it, but it ain't gonna be your saving grace. You have to reduce risk here because what you can't plan for is the Bank of England came out last night and said, I submit, I give up. And the marketplace rallied huge on it. Okay, they're like, we got one. The market literally broke its first central bank last night. People don't look at it that way. They will. So what we're going to do is we're going to show you how to structure a position, okay, and make you into the Amazon of premium selling, okay, and make this reasonable. The first thing, okay, let's get down to business of what do you really want to do, okay? I'll tell you exactly what you want to do. You want to sell as much premium as you possibly can, as much premium as you can. Well, let's show you how to do that. First of all, I'm going to base this fictitious example. I'm going to base the fictitious example on spiders. So let's go to the spiders real quick here. Spiders are trading, let's call it 370. So spiders are trading 370. Here we go. So here is our lovely little, okay, SPY. And the SPY is trading right at 370. Now, SPY can go up or down. I get it. We're going to go out, okay, and we're going to sell. What did we sell a moment ago? 445s? 445 calls. And we're going to collect $1. Simultaneously, we're going to sell, okay, let's get crazy, the 280 puts. And those are actually going to collect $2. And you go, what? You can collect as much as $2? Yeah, you want to see? Let's go actually go. Let's see how accurate we are. Because I'm probably have a position out there. So here we go. Let's open up the 114-day expiration. Here, there's my position. Look where my position's worth, 265s. The 265s, man. Do you realize how far down? That's another 100 points off. That's the marketplace getting the crap kicked out of it, being down another 20, 25%. And they're still going, okay? For what? Look at this, 230. But whatever. I'm just showing you how much juice there is out there and how much of that premium can be harvested. Like I think of premium as like harvesting premium. In 30 days, we can actually burn through 50%, okay? So I go out, right, and I sell this out of the money call. Then I sell an out of the money put. Before I know it, I want to sell, okay, a 265 put. Before I know it, I'm going to be selling, all right, a 450 call for another $1. Okay, and this one I'm collecting another $2. And you look at this, so what have I done? I've sold a couple of naked calls, I've sold a couple of naked puts. What's wrong with selling naked? Sooner or later, okay, you're the pig on the platter. Pig in the poke. You're the pig on the platter. Why? You don't have a hedge, okay? You have to learn to enter, okay, the hedge. What is the hedge? Risk reduction. I'm going to show it on the downside, okay? What we're talking about expressly today is what we call an IKP okay, or inflection point trading. So inflection point trades. What is an inflection point trade? Inflection point trade is actually going to use what we term an inside hedge. There's going to be a risk reduction trade inside here. Like, how much is it going to cost? Okay. Doesn't matter how much it costs, right? Because the bottom line is you can't trade without it. It's kind of like, you can't do your job without, like an insurance policy on there. You just can't do it. There's going to be a cost of business. It's your overhead. It's your overhead. And what's going to happen is this, okay, internal little inflection point is going to save your proverbial behind in the event of a major collapse in markets. Okay. Do I use these? Of course I use these. I'm going to show you mine in a second here. So if the marketplace comes tearing to the downside, what's the inflection point going to do? Okay. It's going to explode in value. So that inflection point spread, which is right here, what happens to it? I know that the marketplace could crash, but I also know that it will explode, meaning that this inflection point will actually cover me. It's like an umbrella, if you will, for risk. It's duck and cover. And what it does is it reduces risk. Does it reduce all the risk? Reduces a critical amount of risk. What do these trades look like when they're on? Well, here, you can go to my monitor tab right now, go over my positions, close up the S&P. Spider position is pretty clear. This one hasn't made any money, hasn't lost any money. That's also because it's brand new in here, right? This is actually the hedge, okay? And here's the position. The hedge and the position, all right? So somebody goes, is it? It's four legs. It's a four-legged beast right now, but I can build this into as many positions as I would like. But I wanted to show you in the most simple context, the most simple context of doing this, okay? And by the way, no, the hedge is a completely different expiration cycle. You do it in the same expiration cycle, you're dead. You're dead, all right? And again, I can't stress to you enough, this is what we do. You can see how many of these I have on. 114 days out, 79 days out, right? Listen, you don't have to have the hedge on for very long, because how long is it going to take you? How long is it going to take you to make that 50%? About 30 days. So why do you need a hedge for 114 days? You don't. You don't need the hedge for 114 days. So let's put it all together. When I say let's put it together, let's actually build this a little bit more effectiveness. So with that, here's the SPY, okay? The SPY is trading right at 370. So I go out and I sell. Again, what I was talking about earlier was these 445 calls, okay? Collect $1. Before you know it, I'm going to turn around, I'm going to sell, right? The 455 calls if we rally and collect another $1. Now, I just have 2 legs there. And somebody goes, how many legs? Well, wouldn't it behoove you, the more legs you could do, the more you could probably make, right? Could I just do one giant trade? I could. Wouldn't it be smarter to spread stuff out, different expirations? It would. Why? Because that way I don't have all the risk here, all the risk here, all the risk anyplace. I'm also going to go out, again, the puts are really juice, okay? I'm going to sell these 265 puts. You saw what they were trading for. They were trading for $2.30, which means I could also, it implies I could sell, okay, the 260 puts, okay, and still collect another $2. Now I've got a ton of premium here. I will have to fork over a little bit of premium to buy that inside hedge, okay? I'm gonna have to buy that inside hedge. And in this case, I'm gonna use a 345, okay? 335 inside hedge, just giving you an example of an inside hedge. So what can happen? And yes, I'm only reducing risk right now in this example to the downside. What can happen over here? Market could rally, okay, or the market could sell off. But if we do sell off, what do I have on? Okay, I have on the ability, okay, to what? I'm covered. If a fast break comes to the downside, you realize going from 370 to 335, right? We're talking about what? Well, a 10% move in markets have a $370 market, okay? It's basically $37. So I'm protected in here easily for a 10% move, easily for a 10% move. More or less though, okay, that spread protects me for about a 15% move to the downside. In that time, yes, I would have to go ahead and exit the position. And when people look at this, they're like, holy crap, that's actually kind of cool, right? So am I really selling naked? Absolutely not. I'm going to go into the analytics. I'm going to show you, okay, simply put, what some of this trade actually looks like. You go, it's unlimited. There's a reason we call it the inflection point, okay? because this is a very, very small trade. This is where the market is. I am profitable. Right now, I'm profitable. Okay. If we go down, we have to actually make a ton of money before I could lose. I want you to see this again. The whole fear of traders is if we're going to crash. This is where we presently are. If we go down, look what the inflection point does. Bounce, rip, and then, and only then. So where do I really start losing money? Somewhere around $295. At 295, could you get out between 370 and 295? Of course you could. The market cannot gap that far overnight. What's the furthest the market can move overnight? Anybody know? Okay, the furthest it can move overnight, 7%. Right? Why? Because there's actually a limit placed at that. So, by the way, I like somebody said it can't place naked calls in an IRA. Really? Really? Because I want to show you this is an IRA. There it is. It's an IRA right there. Sure you can. Okay. They changed all the rules. They changed all the rules. Most people don't know that. In the last 2.5 years, they changed the rules. Listen, this is why you want to use these trades. And I'm going to answer all the questions here in a moment. Okay. By the way, somebody says not at IB. Well, maybe you have the wrong brokerage firm. Think about that for a second, because you just have to ask the right questions. So this is why you want to use inflection point trades. Premium can now be sold in small accounts. Okay. You can do this obviously in an IRA. It's positive theta decay may enhance existing positions, provides an incredibly high probability of success. You do have to realize about hedges. You will rarely need a hedge. In fact, if you want to see, when am I going to use a hedge? You want to see where my hedge is? Here, here's my hedge. Doesn't even kick into 345. 345. So this marketplace has to get down to 345. You know where 345 is? Right down here. Can it do it? Hell yeah. It can definitely get down there. That's why I'm hedging. Okay. But I've sold stuff all the way out here. So again, you can look at this. We've had now what? 2 years of profitable premium selling. Haven't taken a hit. 2 years profitable premium selling. Okay. I like this. Somebody said you don't need to use a spreadsheet to track your positions. Okay. We've done all of it for you. So enhances existing positions, high probability of success. You're never going to need to buy or sell the stop. You'll never use a stop order. So you're not trading the actual stock. You don't use stop orders. You can be wrong on market direction, still produce profitable trades. And I'm telling you right now, you need this in your life. You got to have this in your life right now, right? Inflection point trades can potentially bring in consistent returns while minimizing your risk. If you want to learn how to do this, we're in a moment, we're going to discuss criteria. Because the one thing I want you guys to understand is people are looking at it, they're trying to poke holes and poke holes and poke holes. We're going to discuss that. We're going to poke some holes. Before I get there, okay, the proof's in the pudding. As I said, everything that I do is tracked. Everything I do, this entire account, okay, soup to nuts is tracked. The account's up right now, okay, $206,000, 207,000. Sorry, it's moving obviously around, okay? You can even see, if you're so inclined, you can even see, all right, what they call net lick. Net lick is net liquidating value over the last like 5 days. So I haven't actually moved around a whole lot. Obviously, we're talking about Saturday, Sunday, Monday, Tuesday, Wednesday coming in here. So P&L has been pretty consistent inside of this particular account with the marketplace bouncing around. And that's important. Like, again, it's really important to me that you guys understand, right, that that's exactly what we are trying to do. We are trying to mitigate risk over here. So before I actually get into criteria, let me actually show you a couple live trade examples. Okay, variations of all the following trades can be done with as little as $2,000 in a funded brokerage account. And absolutely unequivocation, you can do this inside of a retirement account. So you can do this in a retirement account. And again, I want to stress that to each and every one of you. All right, first of all these trades also are trade alerts. I'm just showing you like general terms, okay? If you're kind of curious where this comes from, this is a screenshot from TOS. TOS stands for Think or Swim, for those of you that do not know that. That's a screenshot. Basically what I've done is I took 18 months of my account statement, every premium sale that I've done for the last 18 months. I just go into the trade history here. Watch, if I go to spiders and I go back, watch. Let's go back 300 days inside of the spiders. This is everything I've done for the last 300 days in this one account. 300 days, there's 96 fills, and you can see every single position. To open to close, to open to close, to close to open, to open to close, to open to close, to open to close. Instead of you actually trying to match all these up, I did exactly that for us. So opening and closing transactions. By the way, every one of these trades, this is an inflection point trade alert. When I say it's an alert, this is something we didn't just trade, we traded it, and then it actually went out on an alert. An alert goes to each and every mobile device, okay? Obviously, we have TheoTrade Mobile, okay? It works basically on any Android and or iOS. We also have text alerts. So we do push notification and text alerts. Anyway, these are the trade alerts that have gone out. Inflection point trades, bonds, another bond trade. I'm just going to scroll through it. By the way, just so everybody knows, this started in January, excuse me, in January of 2021. Portfolio is still going today, but I'm just going to show you 18 months of results, and then I'm actually going to show you the portfolio itself. So as I actually scroll through here, you can see in date order, most of the returns are right around 50%. It doesn't always work that way. And we start to do a little bit more complex trades. By the way, here's a 19% loss. Okay, just so everybody knows, in terms of premium selling, okay, that's the loss. That is the loss when the IWM went straight up in early 2021. It was a big, huge gamma squeeze to the upside. Okay, almost everything else is very simply put, it's 50% return. Okay, trading high probability, we rarely are ever going to use the hedge. Okay, I'm just scrolling through every single trade in here. By the way, once you actually get your feet underneath you and understand this, okay, we start to actually up the positions. Now I'm actually trading S&P options and futures. An S&P option on future is exactly 5 contracts of the spiders. So once you're very comfortable with spiders, you can actually trade S&P options on futures. Okay, and you can see some 50% returns here. I'm just scrolling through about halfway through the year. Then once you actually understand a little bit more complexity, well, we add more complexity. This is what we call a Christmas tree. This is actually designed for heavy skew. It's a premium sale and hedge. Basically, it's an inflection point trade. Okay. By the way, just to show you that on the Christmas tree, it's $21 credit closed for $3 debit. This is an absolute home run trade. Okay. Every trade in here is inside of this particular account. Every trade in here, okay, here's another Christmas tree, is a trade alert. Okay. So we're just scrolling through. We're now into, again, this is obviously coming into this year. We're all the way into, of course, March of 2022. This is the middle of like pretty hideous crash. And I just wanted to show you something in here. Okay. There's no losses in the middle of what's a pretty hideous crash. Look at all the puts I'm trading as well. Okay. All right. Again, look at all the puts I'm trading. I'm selling puts in the bond market. You do realize the bonds have had an all-out heave-ho to the downside, okay, and we're fine through it. All right, still trading, yeah, short puts, bond short puts, right into March, okay? Bonds were crashing at this point, nothing, right? Christmas tree spread, more puts, more puts. Again, each one unit I did had a profitability of $1,000 on this one. Again, when you're selling puts and the markets are crashing, you think you're getting killed. You're not. We're reducing risk the entire time. Okay. SPY short call, SPY short put. And again, that is 18 months of results. All right. If you're kind of curious where I went, you're like, what happened after May of this year? What happened is I put 18 months of results. I'm like, oh my gosh, this is getting ridiculous in here. Okay. So if you'd like to see the rest of the results, well, here they are. Okay, this is everything that I do. This is the ultimate Theo Theta portfolio. And what we do in the Theo Theta portfolio is everything is tracked, and you can literally just copy the trade. You can copy the trade like that. Okay? And a lot of people do not know this, but you can paste it directly in here. I'm not sure I copied it properly. Sorry about that. I did not copy it properly as I'm live, but you can actually copy these trades and paste them directly into a trading application. That's what this is designed for. These are all the opening trades, okay? And after you see all the open trades, every single trade is categorized in here and all the closing trades. So obviously I closed a trade as early as, this is Monday, okay? So I actually sold one of my hedges on Monday. Sold one of my hedges for $53, okay? Knocking it out of the park. Everything is in here. Every buy, every sell, every hedge, okay? Every move I make is actually inside of the portfolios. When I say no time, no problem, listen, these are trade alerts. The inflection point trade doesn't need you to sit in front of it all day and go, is it working? Is it working? Is it working? It's slow. It's very methodical. The results are perfect for part-timers. Fraction of your time is enough to see really good results, okay? This is what you need, though, for a challenging market. You got to learn a market skill set it's going to last a lifetime. Like we've been selling premium for years, but I have to tell you this, from the onset of COVID, premium selling was like a little bit of like back burner. On the onset of COVID, it came raging back. And not only hasn't abated, it just simply put keeps getting better. All right. It just keeps getting better. And it's one thing that I continually stress to people like, you're not here to survive volatility. You're here to thrive in the chaos. You got to get on the right side of the marketplace. The right side of the marketplace is forget about, the buy, the sell. There's going to be some great stock buys. We're not there yet, but there's going to be some great stock buys. Okay. But you use inflection point spreads, you use premium selling technique in the midst of that chaos. Again, what our members are saying, Kevin was saying, I absolutely love this freaking website. There's so much here, so many different flavors. And again, I try to give you something that's as up to date as possible. Okay. I cannot pull away for more than 15 minutes. I can't get any work done. I could go on, but there comes the short I'm waiting on. This one back in February. Okay. Many people here that make the cost of TheoTrade annual membership nearly every trading day. Okay, it's like a 251 to return on investment. Kevin Gibson, TheoTrade's the best by far. I'll be with him for the rest of my trading career. Okay, I'm up 80K since January of 2022. Enough said on that one. Characteristics of inflection point trading. So the attributes of the strategy are undeniable. You're not buying or selling stock. The risk is limited to precisely your comfort level. And we teach you how to dial in the hedge. I didn't mean to just, go on the surface and scrape the surface of the hedge. It's just that the hedge is very much tailored to you, like how much risk. And we explain to you how much risk you're willing to take, right? You can vary the time frames and further minimize your risks. Again, you're never going to use a stop order here. Stop order will be the death of you in this marketplace. Volatility will kill you. The probability of profitability is high. One thing I want you to understand about the whole strategy here, okay, is simply this. Like you fly an aircraft, 95% of the time, nothing happens. What happens the other 5% of the time? You're like, duck in cover. You have a hedge for that. There is a manual that goes with the sale of premium. But that's why we hedge, right? It's not because we want to sacrifice the lamb, because you need to sacrifice the lamb. It's the perfect strategy to enhance your stock portfolio too. It's an excellent tool for those seeking returns to be able to build an account. The bottom line is like, listen, you need something right now, okay, to generate juice. You need something for monthly returns, and new products allow for the sale of options in nearly any account size and in IRAs. So you have to learn to build a portfolio of options. Do not, and I can't stress this enough, don't let the options portion of this intimidate. Some people are like, well, I've never traded an option, and he's talking about a hedge, he's talking about this, okay, seems a little complicated. There's a little bit of work. I mean, this is not going to be instant coffee and instant tea. And maybe you don't like to hear that, but listen, anything, okay, anything you're going to do in this world, you're going to have to put a little bit of effort in. I don't expect that somebody's going to be a doctor in a couple of days. You're like, oh, it's a wonderful doctor, operate. I watched a YouTube video. I think I can do it. Then somebody will inevitably ask me in here, oh, read a book. Okay, read a book. Please read a book. Go read a book about golf and go out to the driving range. How are you going to do? You're like, I still suck at golf, but I read a book. Okay, doesn't work. You actually have to learn how to do this. Right? We hold your hand to doing that. Listen, the sale of premium is this massive power saw. I'm going to give you the massive power saw. Use correctly. Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the market. But if you don't use them correctly, you're going to lop off a couple of fingers, right? You can sell options, but you're going to need these strategies for the foreseeable market future. By the way, I cannot emphasize that one enough. Like, what else are you going to do in this marketplace? And I am challenging people. Look, what are you going to do in this marketplace? My timing skills. You have no less than 17, okay, United States Fed speakers this week. 17 different speeches are being given, okay, by Fed officials. And I say US. That doesn't count the fact that the Bank of England came out in the middle of the night and they go, surprise, we give up, okay? They asked for our hand in marriage by, like, please don't hurt me. It's ridiculous out there right now. There's no timing, okay? We can show you how and when to trade inflection spreads in a matter of a few hours. What we do here at TheoTrade, okay, it's not just about teaching a strategy. It's about recipes. You wouldn't bake a cake without a recipe. Why do you trade without one, right? if you're going to go out and bake a cake, you're like a little bit of this, a little bit of that. Like you just can't go out there and be like flour. Okay. If you've done it a couple times, maybe you could probably bake a cake without a recipe. But if you haven't done it, you have to follow the recipe. Okay. This is what you need to know to successfully trade inflection point spreads for a living. Okay. What underlying stocks or indices make the best inflection point spread candidates? When I talked about candidates, you saw what I traded. I traded bonds. I traded S&Ps. Okay. I don't mind saying that. There was a Tesla in there. You trade Tesla now, you're dead, because what volatility should I seek out? When you start looking at options, you start sifting through. Okay. Let me make something clear. There are two things that you don't need to worry that much about. What you do not need to worry about. You don't really have to worry too much about the underlyings you trade. I trade the exact same thing again and again and again and again. The why, it's so boring. I didn't say it was going to be exciting. If this is exciting to you, you're clearly doing something wrong. Selling premium, okay, is like getting the aircraft up in the air. Then what does the pilot do after he gets the aircraft in the air? He's like, you got Sudoku? Anybody got Sudoku? You got Sudoku, okay? And they sit there on like an iPad. Once in a while they're like, dial, okay, dial. Okay. By the way, they don't even like touch the yoke anymore, like a stick. They just go dial it in. Yeah, go that way. Go. Again, 95% of the time, you do absolutely nothing in the marketplace. It should be boring to you, and it really should be. Okay. Turn on the autopilot, and you've got absolutely nothing to do most of the time. The products that you trade should be boring stuff. I don't want to hear Tesla. Forget it. I've traded it once or twice in the last couple of years. Why? Okay. What's wrong with Tesla? There's nothing wrong with Tesla, but for this strategy, okay, you don't want too much volatility. Then you got to, what expiration do I select? When I talk about expirations, this one kills me, because if you look at the SPX, the mother of all products, the Widowmaker, you know how many expirations there are on the SPX? 0, 1, 2, 3, 4. There's daily expirations. As you scroll out in time, okay, do they have enough? Should I select 113, 114, 125, set, hike, 78, 79, okay, 50, 51, 63? Oh, which one should I do? Think about this. And not only do you have to know where to sell the options, then you got to know which one to hedge in. Do I use the 22-day, the 23-day? Okay, that's what we're here for. What should be the delta of the options I sell? What should be the delta of the options I buy? Like basically, we have to tell you which options to sell, then turn around which options to hedge with. Okay, how do I build the position? And when I say how do I build the position, I'm not trying to be facetious with this. Like, people are asking the right questions. All right. If you think about this distribution curve, you sell some junk out here, you sell some junk out here. You put a hedge, you put a hedge, you put a hedge in here. How much hedge do I need for how much junk do I have sold? Okay. Yes. I call all this junk. Okay. It is junk. Why is it junk? Because it's supposed to expire. All right. It's basically going to burn. Do I need a large amount of capital in my account to do this? No. I mean, I've mentioned that a couple of times. Does it help? Oh, it's exciting to have lots of money in your account, but if you have $2,000, you can do this. It's not going to be like huge, but you can do it. And that's important to me, right? You don't have to sit here and, well, I can't do it. I don't have the margin to sell naked spiders. I didn't say you had to sell naked spiders. Okay. How about you could do this? You could use these. These are called micros. See those micros? Okay. I want to show you something about micros. Let me close up my spider position. My spider position is tying up $10,000 in margin. You go, I don't have 10 grand. Great. Do you have $2,000 in an account? See this position right here? It's tying up $1,352. You want to know why it ties up that much? Because that is inside of my IRA. If you have a regular margin account, it would only tie up half that. So you'd be tying up what? About 700. You can do this, okay, with $2,000 in your account with no problem. There's different products, maybe products you're not familiar with, all right? What's the right amount of risk for me? We can help you dial in risk. If you say, I don't want to lose more than X amount, okay, I'm not comfortable. I want to make sure that if in the middle of the night, the marketplace completely crashes and burns, we can help you dial that risk in. That's what this is designed to do. What are the percentage returns supposed to be? I can help you with that, 50%, okay? How do I protect myself from market crashes when selling options? Use inflection point trades, right? Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading, okay? When I say recipes in trading, what this is really based on. And again, I want to give you just a full lowdown what a recipe in trading comes down to, right? The whole thing I've been talking about like a pilot and just setting in like autopilot and so forth, the whole idea of how we actually build these recipes, okay? It's about criteria. When you actually get into an aircraft, and a lot of you, if you've flown, okay, if you've seen the cockpit door open before they take off, all they're doing in there, the pilots are in there doing checklists. Okay, they actually walk through a checklist. Does this work? It always makes me feel warm and fuzzy when they walk around the aircraft outside and they start pulling on the engine. And I'm like, okay, that doesn't make me feel warm and fuzzy, but if that's in your checklist, man, go for it. Anyway, we have a very definitive checklist. And then more importantly, okay, after you get into the trade, it's not just a pre-flight checklist. After you get into the trade, what can the market do? The market can go up, market can go down, market can stay flat, dividends are coming, expiration is coming, triple witching. Oh my, like all of these variables. There's a dividend coming in, it's triple witching, and okay. That's what we're here for. We're here for variables. Okay. Trading is about answering what ifs. What might be a good stock? Okay. What's the correct options expiration cycle? How much capital do I commit to generate selling premium? What options do I buy? What options do I sell? How can I limit my risk? We have those answers. We build these recipes with definitive criteria, right? Checklists. I mean, they're just checklist after checklist after checklist of each strategy and each unique variable you're going to encounter. When I say each unique variable, what if we go up? What if we go down? Okay, what if dividends are coming? What if expiration's coming? My hedge is running out. I'm getting killed over here. We'll actually answer those questions. We'll give it the right probability of the trade. How many option contracts do I trade for my account size? When do I close my premium sell? What if we sell off big? Do I bail out of the trade? Okay, what if we rally massively? Can I fix a losing position? It's about how, it's about when, it's about why, it's about what price. And I'm telling you right now, that is just the beginning, okay? The beginning of all the variables that you're going to face while trading inflection point spreads for a living. You can read what inflection point trading is, all right? Yeah, by the way, you can go into Google. I like to tell this to people, you can go into Google and you can Google sell premium. 10,000 pages will come up about selling premium. You go, oh, okay, so 10,000 pages. What does it have? Absolutely nothing. You need TheoTrade's recipe for success. Selling premium, anybody can figure it out. 20 plus years trading experience. That's just me. We have 7 other full-time instructors that are working on this criteria. Okay, we had access to client order flow for 15 years. One thing I can't stress enough, okay, when I say been there, done that, and the buck stops here, I mean, okay, I got to see everything you did for 15 years. By the way, 3 of the other instructors here at TheoTrade also actually stem from Thinkorswim TD Ameritrade world. Okay, we have viewed and studied millions of accounts. And I'm not talking about just looking, at each trading account. Here's Mike's account, here's John's account, here's Cynthia's account. That's not what we did. We actually used an entire division of TD Ameritrade, okay, to break down what strategies work, what strategies don't, the timing of these things. Again, I ran education at TD Ameritrade for 15 years. We have the largest options order flow in the industry. And you're going to learn again that criteria is your recipe for success. We spent years, okay, fine-tuning this trade setup, fine-tuning this criteria, and we approach the section on criteria. You simply follow the steps to be able to build a trade. The inflection point trading system, it's a 4-hour course. Before everybody freaks out and it's another $500. Yet we don't do that anymore. I'm going to make that very clear. We don't do what? We don't sell a la carte classes anymore. So the one thing that I implore you to understand, and I'll explain this momentarily, is before anybody freaks out and go, it's another class, $500. That's not what TheoTrade is, okay? We put together a class expressly on inflection point trading system. Okay, every variable, how to get in, how to get out, how to actually the pre-flight checklist, the in-flight checklist, okay, how to build the hedge, how to actually put on the inventory. It has it all. Okay, it even has an entire 2-hour section expressly on small accounts. And the class slide deck that includes all of the entry and exit criteria, it's available immediately. This class is ready to go. Okay, when I say ready to go, we recorded the class, we clean it up, all right? And we just present it. It's basically on our site, looks exactly like Netflix. You go in there, you just hit play. Okay, if you don't have access to a computer, play it on a mobile device. You can play it on any Android, okay, any tablet you can imagine, any Android, any iOS tablet, that's fine. Okay, when I cross out the $500, listen, I have watched this education industry from the beginning of when I started in here. So when I say I've watched the education industry, I realize that a lot of you guys have gone out, you pay $500 for a class that looks just like this. Then They charge you 500 bucks for an indicator. That indicator went with the class. Before you know it, all that obsolete. Okay. And after it's obsolete, pay another $500 for a class. You have to pay $500 for an indicator, and it just goes on and on and on and on. Okay. I'm going to make this very, very clear. TheoTrade, okay, is all encompassing. When you come to TheoTrade, you're not just coming here for inflection point trading. Okay. We do not allow, okay, anybody coming to TheoTrade just to watch the class and just be like, okay, out the door. It doesn't work that way. You can watch the class, okay, but maybe you don't know anything about options. We have to get you ramped up. So before you even go to the class, okay, before you go to the class, well, we have to go to the Start Here menu, right? If you know nothing about options, why don't you go to the Start Here menu, Options 101, Options 201. Okay, you don't know enough to even know what you don't know. So maybe you watch all these videos. Each one of these, by the way, is 45 minutes, right? And you go, that seems like a lot of time. Well, if you know nothing about options, I think it's a pretty good place to start, okay? After, though, you actually watch the inflection point trading system, then what do? Okay, you sit there and wait for what? Me to send you alerts, okay? We're actually going to send you alerts with this. Why do we do that? Well, because it's part of it, okay? It's just part of it. We give you access to everything we've done. TheoTrade, okay, was launched in 2016, right? By 2016 to now, we've done over 100 classes. I'm going to tell you about that. You get access to every single class right now. You also get access to a live chat room. Okay, when I say a live chat room, we're actually live every single day for 6.5 hours. Okay, we're live right now. When I say we, who's we? What time is it? Oh, Tony Rago right now. So it's Tony Rago time. So when I say Tony Rago, oh, don't. Okay, apparently I'm not logged in. I will fix this. Okay, I will fix this. I have to log out and log back in. It's been a while. It logged me out. So I'm going to log back in. I've been booted from our own site. So come on, there it is. So if you actually want to go to the member chat room in here, Tony Rago's live right now. What's he doing? He's calling out trades. Okay, you don't necessarily have to do this, but I want you guys to know it's there. It's all encompassing. All right. So when you actually come to TheoTrade, we give you everything that we've done, okay, since inception, since 2016. It's $297, all right? And we give you access for 3 months. And I just tell people right up front, that's what it is. What do you get access to? Everything we've done. What's everything we've done? I'm going to show you that here momentarily. If we have an indicator, we don't charge for indicators. We give them to you, okay? If there's a class, we don't charge for that. Oh, you can email us. We'll actually give you, like people say, I can't email anybody anymore. If I call Charles Schwab, they're not going to answer the phone. And if they do, they're not going to tell you anything. You can email us with directly ask us trade related questions. Most of us has actually carried all of our brokerage licenses. We know how to answer the questions. Okay. You can ask us, don't tell me like my sister's dog's boyfriend has this question about trading, my hypothetical paper trade. Okay. You don't have to do that here at TheoTrade. Just email us, come out with it. By the way, we may actually tell you that's the dumbest trade I've ever seen, or that's the greatest trade I've ever seen. But what do we also do? Okay. Alerts. What's alerts? We're sending you our trades. Okay. And we believe strongly, we trade. And you know, a lot of people, why do you sell courses? I don't sell courses. Okay. There are now 6,000 people, okay, doing this. And somebody says, what happens after 3 months? Already people are asking, what happens after 3 months? You can do it again. We do not do reoccurring, okay, reoccurring payments, meaning that we charge you $297 for 3 months. What happens after that? If you want to do it again, we charge you $297. For how long? For 3 months. If you want to do it again, like, you guys get it. And I wanted everybody to know that right up front. Anyway, before I go any further, I want to explain a lot more about TheoTrade, and I'm more than happy to answer questions in here. Okay. But the inflection point, trading system curriculum, you're going to learn to sell premium. You're going to create high probability positions that generate monthly returns regardless of account size. You're going to discover how to hedge existing positions. The cool thing is about inflection point, you can hedge in extremes. Like all of a sudden, market's getting hammered. It's getting hammered and hammered. You can hedge in the midst of that. Most places you can't do that. And that's actually one of the biggest takeaways here. Learn how to hedge, okay, in a crash. You're also going to learn detailed criteria for inflection point trades, keeping risk at a minimum. You're going to learn how to analyze inflection point spreads. That is a huge one. You're going to be able to see the forward future. Okay. Find out how many inflection point spreads you can safely allocate for your account size, right? This is what you are here for. I also want to tell you something that's interesting. We have another class coming up. As I said, we have done like 100 classes since 2016. Like, how can you do that many? There's eight, including myself, full-time instructors here. Okay. We just keep churning out class after class after class. You get access to all of them. Like, but I'm telling you right now, this is what you want to do. We've been talking about, okay, inflection point trading for better part of 2 years. Now we've changed up the hedging a little bit. We called it Ultima. It's the same logic, but this, okay, this is even easier. Inflection point is so much easier than Ultima. It's so much easier to teach. In addition to it, we're also going to give you flyby. Flyby, stability and profitability in the midst of volatility. What's flyby? Okay, it's ratio butterflies. There's a class. It's coming live October 18th. Who's teaching it? Me. I strongly urge you, better get ramped up. Okay, get your helmet on, people, because this class is coming. This class, all right, it's live, but a class will be archived with download capability for iOS and Android right after. Okay, and somebody goes, can I download it now? No. See, it only comes on October 18th, so you cannot download it now. And the class slide deck that includes all the entry and exit criteria is going to be available for download October 18th. Obviously, same day as the class. It's 10 a.m. though, October 18th. Wow, okay. What is the flyby? Stability and profitability in the midst of volatility curriculum. This is a strategy like it's ratio butterflies, okay? It's something like I had to pull out of the bag of tricks because I have not used like ratio flies. They haven't worked very well since all the volatility of back in like the time of the election, like 2016, 2017. This was a rocking strategy. It's back, baby. It's back in a big way right now. So we're going to teach you how you can take trades where you risk one to be able to make two. Risk one to be able to make two with a 70% chance, okay, of not losing anything. How volatility skew can actually benefit you, all right? And knowing what to look for in vol skew. Ratio butterfly spreads transcend all market conditions, right? Here's another one where it's like the faster we go in the markets, the better it gets. It's chaos, okay? How ratio butterfly spreads can benefit your trading arsenal like no other trade. And of course, this too is probably one of the most comprehensive guides I've ever built. In terms of criteria, seriously, the flyby is one of the most comprehensive. This is included in what I just talked about a moment ago. You know, for 300 bucks, it's included. All of that, there's a money back guarantee. Theo trade, excuse me, it's completely riskless trade. If you're not satisfied in the next 90 days, obviously, as I alluded to you a moment ago, okay, it is $297 for what? It's 297 bucks for 90 days. Anytime in the next 90 days, if it's not for you, okay, if it's not for you, there are no stipulations. There are none. Okay, just receive a full refund. You do not call us. You don't have to do a little dance. You don't have to send a certified letter, okay, with blood on the envelope. Like, you don't have to do any of that crap. Just email, support@theotrade.com. One thing I implore people to understand, like, look, no excuses, no questions, no commentary needed. It's 297 bucks. We have 6,000 people that are currently on TheoTrade. We want people that want to be here. Well, there's actually, you know, in the crowd today, there's a couple of people that I recognize a couple of the names. Even if people like leave TheoTrade, I had a busy summer, okay? They always come back. Like that, that's the way we want it. It's community. It's 6,000 people, okay? That any given day, on any given day, if you cruise over to our chat room in here, okay? Any given day now, we have over 3,000 different individuals logging on per day. At any given point in time, there's about 1,000 live in here, right? Instructors are highlighted right there, like Tony Rago. He's actually calling out buying 16, will short 20, okay? He calls out all the different trades he's doing kind of in real time. There's a lot of different genres of trade, but I want you guys to know, again, there is a 90-day money-back guarantee. So the first 3 months, do everything you possibly can. If it's not for you, seriously, get your $297 back. Follow me now to theotrade.com/IPT. Again, it's theotrade.com/IPT. The reason I'm taking you over here right now, okay, just to show you, there are 30 riskless spots. Inflection point trading, okay, includes the flyby class. By the way, I'm going to go through all the bonuses that are involved here at TheoTrade. All you have to do is click add to cart. When you click add to cart, there's a lot of people obviously clicking on this right now. Billing information. One critical aspect, put your phone number in here, because your phone number automatically enrolls you for text messaging. And that's why I'm actually bringing it up right now. The text messaging, I'm not going to bombard you with, 10, 15 texts a day. Typically, okay, we do about 2 to 3 texts per week. Okay. Predominantly it's for inflection point trades. Okay. And sometimes though, there'll be a flurry. Like last week, there was a flurry of trades. We were rocking. Like we did like 5 trades in like one day. Apologize to those of you that got a lot of text messages in one day. Put your phone number in there. If you're not comfortable, okay, you can always actually use our app, right? So we have a TheoTrade app. Make sure open it up and everybody can see it. Okay, so there's a full blown, when I say a TheoTrade app, yes, we have our own, okay, app in here. When you come into the app, what it basically does is you can do push notifications. Those push notifications will come to you. By the way, you also can do $297, $149, 2 payments of that, or 3 payments of 100. We don't care, but it's important that you know there's a money back guarantee associated with it. Again, you go to theotrade.com / okay, it's I as in igloo, P as in Peter, T as in Tom. So theotrade.com / okay, IPT. I'm actually going to go on and tell you all the bonuses of TheoTrade. Those of you that are enrolling, okay, I'll read off your name, just the first name as you actually enroll here for this, and answer some of the questions. But let me give you all the different bonuses. By the way, I love this. Close my entire portfolio with profits. That's huge. Anyway, you want a bonus. TheoTrade goes beyond one class or one indicator. We give you everything, okay, that you're going to trade and invest with at one place, okay, and at one price. And it's one of the things that I really stress here is that we're not here, we don't nickel and dime anybody. Anything and everything that you need in this business, we're providing for you at $297, right? And I always tell people, I'm like, look around the site. If there's something that you need in here, start here menu or tutorials or a newsletter. It's a nightly newsletter, okay, which I do several times a week. Member chat room over here, okay. Theo Invest, which is more investment track, different portfolios that we offer. So we're not just doing premium selling portfolios, right? We do like in-out spreads, archives, and access to all the archives in Corey's Corner, okay? We go, all right, this is like the full Monty in here. First bonus, quick start beginner's guide. This is to just get you ramped up. As I showed you a moment ago, like options 101, options 201, quick start beginner's guide. Bonus number 2, access to over 100 trading classes. Okay, if you're kind of curious about this, and I'll spend 2 seconds on it. If you think about like some of the trading classes, right? What kind of classes? You go under archives here and go to class archives, right? Go to class archives. We're broken down into like options, option newbies, technical analysis, day trading, stock trading, futures and bonds, just to give you an idea, okay? My genre is going to be, of course, options, Z spreads, inflection point, income accelerator, Ultima, right? This is the kind of stuff you want to see. Right? Look how many classes. This is just on the option side of it. Fruit flies, okay? Duration irons, which is totally different than an iron condor, in-out spreads, strategy week, trading VIX options. All right, this one's huge. Okay, risk twist. All right, it just keeps going and going and going. That's the depth of the archives in here. Okay, bonus number 3, you get access to our chat room. So what is the chat room? Once again, I bring up the chat room in here. Let's go over here to the member chat room. So inside of the member chat room, all day, every day, somebody's live. Okay, I kick off each and every trading session. Just take a quick glance. You're in the community. You can chat in there, ask trade and trade related questions. We also give you instructors, all right, that will directly answer your trade related questions via email. I'm going to tell you right now, for $300 for 3 months, if you just emailed us one time, just one time in the next 3 months, you think it's worth $300? I mean, again, that alone is worth thousands of dollars. Some of you guys are going to have, $600,000, $700,000, several $1 million, investment accounts. Email us. We have an entire genre of classes just on hedging, okay, which is risk reduction. You go, oh, how come you're not talking about that right now? Because, nobody ever wants to talk about like hedging. They always want to talk about how do I make money? How do I make money? But if you go to the class archive over here, serious, there's an entire archive, okay, for hedging strategies for those of you that want to reduce risk, okay? Next over here are the instructors. Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman. By the way, okay, Brandon, Corey, Jeff Bierman are all CMT. There's a lot of investment banks that don't have 3 CMTs on their crew. We have 3 CMTs on our crew. Jeff Bierman's also a professor of finance at DePaul University in Chicago. Slim Miller, Tony Rago, Blake Young. That's our crew over here. Blake, Brandon, okay, Jeff Bierman also worked with me at Thinkorswim TD Ameritrade. Onward, this is actually the crew working from home. Access to 59 proprietary indicators and scans. Anything that we build in terms of code, we give it to you. It's part of this, okay? All of them. By the way, we're going to give you the auto expected move indicator here in a minute. All right, bonus number 4, Theo Theta Live portfolio. This is the portfolio. We also have the Theo Theta portfolio is a bigger portfolio. Then we have what we call Theo Theta Small. And you'll hear, okay, a differentiation in that. The small portfolio is for accounts as small as $2,000. You can follow either or. If you look here at Tastyworks, and Tasty, this is the Theo Theta Small portfolio. I'm only tying up $1,300. You go, that's not enough. I traded with 20. You could actually do, okay, more. You could do more, all right? Onward and upward from there. Okay, so you get access to the portfolio. This is exactly what the portfolio would look like. I showed you that a little bit earlier. If you cannot watch, like people go, it's a little overwhelming. I think that everybody would rather be overwhelmed rather than underwhelmed. Like we want you to come to the site and go, holy crap. But at the same time, there's something for everybody in there. It's why there's 6,000 people on the site, okay? Look, the inflection point spread, there is a weekly update. In 12 minutes, we give you every move that we've made. I do these weekly update videos. In 12 minutes on a Friday morning, I give you every move that I've made, okay, in the portfolio. Why do I do it? Because not everybody here kind of can watch all day long. Like if you can't watch all day long, every detail of everything we do is also recorded. So you get update videos in here. Bonus 5, technical analysis toolkit. Okay, if you're in a technical analysis, second to none. Bonus 6, day trading treasure chest. We have 2 full-time intraday traders. Corey Rosenblum, Tony Rago, they do nothing but call out trades in the live chat room all day long. That's what they're here for. Bonus 7, mindset mastery. I would write this down. Okay, 5 essential building blocks to successful trading, okay, with Steve Miller. Probably one of the most influential courses that I have ever watched. I am telling you that it's that influential. We have mindset. Okay, this is basically our in-house like psychologist for trading. Every individual needs to watch this, and it'll help you in the volatility like never before. Bonus number 8, quick start guide to be able to sell premium. All right, what our members are saying, this is the first educational trading service that I'm actually making a profit with, and one which I can see a pathway to retirement. Comes from Pat back in January. We include everything. Classes, coaching, email access to the instructors, live trading room, indicators and scans, mobile access. It's everything you're going to need to succeed. We've literally built like the Netflix for traders. Speaking of the Netflix for traders, you can even download the mobile app, okay, and watch stuff while you're offline. You could be at 30,000 feet and actually be watching it on your phone because we have download capabilities. You can even have variable speeds and watch me at two times the speed. I sound like a chipmunk. Everything is $297 for 3 months. Again, go to theotrade.com/IPT. I just want to reiterate once again, okay? As you cruise over here to theotrade.com, all right, IPT, you can ask questions directly here in the Zoom room. You can ask questions right here, okay? It says we are here on the site, all right? We'll be able to answer any of the questions. Just simply click add to cart. To reiterate the address, it's theotrade.com/I, okay? I is in igloo, P is in Pete, T is in Tom, okay? And the other aspect I want to reiterate over here again, because I go through this a couple times. There's a 90-day money-back guarantee, right? In the money-back guarantee, you can watch as much of the content as you want. Not even Netflix does this. You can watch as much of this as you want. You can watch our stuff live. You can watch the inflection point trade class. We've even had people like, oh, I downloaded this and I downloaded that. Like, we get it. People, listen. It's only $297. Like, it's not going to kill us. Anytime in the next 90 days, if you are not comfortable, okay, get a refund. We want people, and I stress this every single time I do this, like, we want people that want to be here. We want people that want a trading community. This is not like, we come in here and we sell a $20,000. We don't have any of that crap. It's $297. That's it. okay, for 3 months. And you go, what do you want to do after 3 months? It's not an introductory price. And we never bill you again, okay, until we say your 3 months is up. What would you like to do? This is not like a gym membership, again, that you can't ever get out of. In addition, you even get to view the flyby course. Okay, the flyby, I'm going to get this one out. The flyby course is coming October 18th. I am the instructor for that one. I typically do 2 to 3 major classes every year. This is a major one, and it's coming. It's just part of the 90-day money-back guarantee. Get in a Theo trade now. We're going to work with you directly. There are 30 spots available on the riskless deal. Now, there's no question. We do that expressly to incentivize you to enroll today. And quite frankly, you need to, because you want to kind of get ramped up through the system before you start going to some of the live classes. Okay. Everything that we do, okay, one of the most critical aspects, and I want to reiterate as well, unlimited email mentoring, meaning that you can email us, I'll email you back. You can email us and email you back. You can send us your trades. That's part of it. Like, that's what we are here for. And if that's what it takes, okay, you know, you need somebody to be able to bounce ideas off of. That's what we're here for. $297 riskless offer has never been available before with Inflection Point trading system and access to the new flyby class that's coming October 18th. You know why it's never been available before? Because I haven't even done the flyby class yet. Okay, flyby, it's built. It is ready to go. Why October 18th? Okay, I'll be very forthright in saying this. Made it October 18th because I live in the US Virgin Islands right now, okay? And we're a little bit of an unstable environment in the last couple of weeks in terms of storms. So I've actually pushed it out to October 18th to kind of make sure that I'm a little bit more in the clear, all right, in terms of like storms and so forth. We just were on generator power for 5 days. All right, I'm going to answer some questions over here. What our members are saying: closed my year-to-date profit from Ultimate Trades, paid for my yearly Theo Trade subscription. Get Inflection Point spreads, quick start, beginner's guide, 100 trading classes, access to the chat room and all the email access you want. Theo Theta portfolio, Theo Theta small, okay? The technical analysis toolkit, day trading treasure chest, mindset mastery, and the quick start guide to being able to sell premium, right? This comes from Jeremiah. Again, theotrade.com/IKPT. You can go to that link for the auto expected move indicator. I'll kind of reiterate that one. The auto expected move indicator is located towards the bottom of this page, okay? For those of you that are enrolling right now, you need not go download that. We give you all the indicators, okay, everything. Just click add to cart, okay? Remember, don't forget to put your phone number in here. And again, it's completely riskless for the first 30 individuals that enroll today, okay? Let's get to some of the questions over here. What do you need to get started? You need a laptop, internet connection. Quite frankly, you don't even need a laptop anymore. Any tablet will work. One interesting thing, and this was not true just a few years ago, one really interesting thing, the brokerage firms from a trading perspective, they're like iPad and Android apps are phenomenal at this point. Just absolutely phenomenal at this point. So you could just download our app onto your device. By the way, you don't need, like, people always ask me and like send me emails about like, which iPad should I buy? Buy the $299 Walmart kind. I do. Okay, I absolutely do. All right, continuing on. It's not a membership. This is not a membership. Okay, we do not auto renew or bill again. So there's not going to be like constant, again, constant like re-upping in terms of like, hey, it's $297. It charged me automatically. We don't do that. We don't do any of that, right? Number 3, we provide weekly update videos. That's that 12-minute video, okay, that we consistently do. So that 12-minute video that we do on a weekly basis just updates you on all the moves that we make throughout the course of the week. Number 4 here, we archive everything. And I'm going to answer specific questions in a second. I just want to go through some general stuff, okay? We archive everything. If you can't watch throughout every trading session, it's fine. You don't have to watch, okay? But it is kind of cool. Like if you find somebody, you're like, hey, I really want to listen to, Don every day. I want to listen to, Matt every day. I want to listen to, Blake every day. you can. And I'll do an hour and 10 minutes. I do an hour and 10 minutes every morning. And you can actually listen to the hour and 10 minutes sped up probably in about 30, 40 minutes. You just speed it up a little bit. So we archive every spoken word since 2016 on TheoTrade's been archived. Okay. Number 5, we provide you access to mobile so you can download archives at your leisure. Number 6, add your cell phone number when enrolling. Okay. That'll get you for the text messages or download for push notifications. Okay. Number 7, you can email us anytime we'll receive a response. Okay, within 24 hours. By the way, I throw the 24 hours. The average email here, okay, general support emails are answered in about 17 minutes. I say 24 hours because some people, like, they will literally, they'll shoot us an email with 5 minutes to go on a Friday, okay, expiration day, and the markets are rocking those days. So please give us a little bit of lead time because we trade. I answer emails before the market opens or predominantly after the market closes. During the trading day, I'm trading them live on here. I'll do a couple of media hits from time to time. So please give us a little bit of time, but a heads up is perfect for us. All right, by the way, a couple of names for those of you that are enrolling right now. It takes, excuse me, it takes me about 5 to 7 minutes before I see your name appear. Okay, I'm just reading the first batch of names to let you know, number 1, that you've enrolled. Number 2, that it's a completely riskless deal for you. Mark B from Oregon, Rich J from California, Mark D from Illinois, okay, Barry B from Texas, David S from Georgia, Brian B from Michigan, okay, Min L from California, Michael C from Pennsylvania. It's just the very first batch of names that I'm actually seeing come through. There are more, but it'll take me, again, about 4 or 5 minutes before I see them at this point. All right, variations, okay, of all the trades that we're doing can be done in an IRA and retirement accounts with as little as $2,000 within the account. Specifically in an IRA, okay, if you're going out there and you're doing, again, inflection point, you should have $5,000 in the IRA. All right, $5,000 in the IRA, $2,000 in a regular margin account. Again, you get access to everything we've done inside of the archives over here. And again, if you're having trouble with a brokerage firm, people always say that, like, my broker does this, my broker does that. Okay, we'll get you approved for options trading at several different brokerage firms. Look, there are 30 riskless spots available. Get results, take action, enroll for TheoTrade now. There's no risk. There's no risk enrolling. Again, it's theotrade.com/IPT. I'm going to answer a couple of the individualized questions in here and then kind of wrap things up. All right, if you guys have questions right now, we are in here, we are answering them in real time. All right. Oh, I like this. When somebody said at any given time, for every $10,000 in a margin account, what's the most margin to be tied up, okay, in all the trading alerts, realistically, per month. So ideally, okay, if you have a $10,000 account, even if you know what you're doing, you wouldn't, in the type of product we're going to trade, you wouldn't want to tie up more than about 4,000, okay, of the 10,000. You wouldn't want to tie up more than 4,000 of 10,000 in the premium sale. And it has to do with the fluctuation, okay, of margin in there. And it's actually, that's pretty good. So we'll actually, you'll get a feel. It'll take like a month or two, but you'll get a feel for what we actually do in the Theo Theta Small. So the whole design is the Theo Theta Small portfolio is to not tie up, but like basically $2,000. So, and we explain all of this inside of the class. But if we're not tying up more than $2,000 and you have a $10,000 account, you quickly find out, okay, well, I should be doing double or triple of what Don is doing in the Theo Theta Small account. Instead of doing 1 contract, you should do 3 contracts. And we actually walk you through that whole logic in there. So hopefully that makes a degree of sense. Okay. You know what? So Emilio said, what's the average number of trade alerts in 3 months? So in 3 months, there's a ton of trade alerts. Each week, you're probably getting 2 or 3. I think that's probably the better way to figure it out. However, there are different strategies. We're actually going to shoot out. We do a lot of in-out spreads. We do some like back ratio spreads. Okay. We actually do some butterflies and we do premium selling. So, okay, we send the text messages to everybody and you can kind of pick and choose what you want. Like the premium selling stuff, with all due respect, pretty boring. Like you put it on, sometimes you wait 30 days, it comes off. And you put it on, you kind of wait 30 days, it comes off. And you're like, wow, I just received profitability. That's the idea. Like, this is not supposed to be exciting. It's supposed to be profitable. So the in-out spreads are a little bit more exciting because they sometimes come on, come off 2, 3 days later, which is a little bit more fun for traders out there. So I hope that does help. I'm just reading back over here. Okay, inflection point trade is definitely unique versus Ultima. The logic is the same of selling premium. How you hedge is completely different. Inflection point trading, okay, is incredibly unique in terms of how you're hedging. Okay, you're transacting by selling premium and hedging in the same, in the same transaction, and that's one of the reasons it's so incredibly effective at this point in time. All right, so I have eaten up enough of individuals' time here today. I want to thank each and every one of you for tuning in. Again, I'm going to read off a couple of names. I think a few more names are coming, and a few more questions. I'll stay on here. Warren D from South Carolina, Kevin P from Illinois. Again, there's still a bunch of names coming through right now. I'll hop on here and answer some questions by typing in here, steotrade.com/KIPT. Pam H from Singapore. Can take a few minutes to pop up over here. By the way, I've spent a lot of time on the ground in Singapore, so thanks for tuning in at this strange hour, of course, for Singapore. Anyway, with that, thanks everybody for tuning in today. Have a wonderful afternoon. Bye bye.